Hey everyone! Apple management held a question and answer session with Wall Street investors that provided a lot of insights that had a lot of investors talking about Apple stock. So in this video, I wanted to go through that Q&A session. I pulled out specific information that I thought is most useful for Apple stock investors and those interested in Apple stock. So let's get right into those answers. So starting with Luca Maestri, Apple's CFO, highlighting that the company's 44.5% gross profit margin in June was an all-time record for them in this quarter. He also goes on to say that they have a commodity environment that is favorable to us. Isn't that a sigh of relief? After 2 or more years of companies talking about commodity prices soaring higher and out of control, Apple is talking about a favorable commodity environment. That means commodity prices are coming down, and that's great news for those of you looking for inflation to come down. Apple goes on to say, the CFO goes on to say that we're in a good position right now. We're in a good position for the June quarter. And as I mentioned, we expect a similar level of gross margin for the same reasons in the September quarter. So not only are commodity prices down, but Apple expects commodity prices to remain low at least for the next quarter. So that's a relief for those of us seeing inflation everywhere. The CFO goes on to answer another question, saying that the majority of iPhones at this point are sold using some kind of program, whether it be trade ins, installment payment, or some kind of financing. And that percentage, which again is well over 50%, is similar across developed and emerging markets. Yeah, I mean, Apple's products are getting expensive. You've got some iPhones that are well over $1,000, computers over several $1,000s, iPads can approach over $1,000, and now with the new Vision Pro VR headset, close to $3,000. You've really got some products that can benefit from financing offers where people can make payments over some time period instead of having to pay for it all up front. And that can change the purchase decision from someone saying, you know what, I can't afford it, to them saying, okay, if I can pay it off monthly over 1 year or 2 years or 3 years, then that makes this product in reach for my budget. Moving on, the CFO says September, they're guiding for 44 to 45% gross profit margin, which is historically very high for that quarter. So for in terms of profit margins, the company is expecting historically high level of profit margins in the next upcoming quarter, in the quarter that's about to end in September. And so obviously saying that's a favorable environment for us, and that goes back to highlight what the company said about commodity prices, inflation coming down for them in that regard. Also, Apple has done a good job controlling costs. They haven't been like many of the other big tech companies like Amazon, Alphabet, and Facebook, Meta platforms announcing big, massive layoffs. They've done it more so by reducing hiring. They've just slowed down hiring. And if you slow down hiring enough, you've got a regular amount of people, a typical amount of people that resign, quit, change jobs every month. And so if you slow down your hiring below the pace of people that are quitting or changing jobs, then you more steadily can right size your business without having these disruptive job cuts, which I have not been a fan of. I've more so been saying to handle this situation of having too many employees in the way Apple is doing it. Just slow down hiring. That makes it a lot less disruptive than announcing massive 40, 60, 70,000 job cuts and then having to decide who those people are going to be that you're going to cut. And by making the rest of your employees feel uneasy, the ones that want to be there, making them feel uneasy. Instead, how about you just let the people that already are thinking about quitting, are getting job offers elsewhere, you know, they're going to quit anyway. So just don't replace them as often or as much as you normally would. And in that way, you reduce your headcount by attrition rather than by disruptive job cuts. So I've been a fan of the way Apple has handled it, and it's showing up by very strong profitability, not just in the gross profit margin, but overall profit margin. Earnings per share has been good. They haven't had to take these massive one-time charges of several $billion for severance and other things that, Alphabet and others have had to undertake. So that's it for this video. I hope this provided some insight into why everyone is talking about Apple stock after the company had this Q&A session with Wall Street investors. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.